Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's happening in the Russian economy because the latest inflation data is now available and it shows that inflation has now risen above 10%. And that's the first time that it's been in double digits since February 2023, so for more than 2 years. And in terms of putting this into context, I thought I'd ask you the quick question as to when you thought the last time inflation in the USA was above 10%. And the answer to that was 1981. And just to make everybody feel really old, that was actually 44 years ago. I know for a lot of people it doesn't seem like 44 years ago, 1981, but it was a lifetime ago. Many people watching this video weren't even born when inflation was at 10% in the USA. But that's where it is in Russia right now. And in today's video, I want to go through the details as to what's going on in the Russian economy because I've spoken a lot about it and said that Russia's in a state of difficulty right now. And a lot of people don't seem to want to accept that. Everybody's saying, you're talking a lot of rubbish. Russia's actually doing really well. Look at what's going on with the ruble as an example. And we'll talk about that later because the Bank of Russia is having a massive influence on the position with regards to the ruble right now. So we'll go through exactly what's happening with that. And we'll also have a look at the money supply because when you're setting out an economy, if I was to set up a new country, Joe Blogs land, and invite everybody to come along, I'd have to work out how I was going to work all of the economics. So I'd have a target rate of inflation, and let's say it was 2% because that's the target rate in a lot of advanced economies. And obviously Joe Blogs land would be a super advanced economy. It'd be one of the best countries in the world. Everybody would want to live there. And the reason that I'm setting it at 2% is because, as we've said before, you need an element of growth in prices to be able to allow all of your companies to pass on cost increases. Because if their raw material prices are going up by 1 or 2%, they need to increase their sales price to make sure that they're not going to eat into their profit margin. And also, you want to be able to pay your people higher wages so you can have wage increases and still allow your prices to go up. So all of that would be good. And the other influence that I've got in terms of what's going on in the economy as well as interest rates, because I can fiddle about with interest rates if I'm not happy with what's happening with inflation. If inflation is getting out of control, going too high, I can increase interest rates and that will make things more expensive in terms of borrowing. And so people will calm down, demand will fall, and therefore prices will stop rising at such a fast rate. But if inflation and interest rates aren't really working to my satisfaction, I've also got the money supply. And the money supply, as I'm sure you've heard a lot in the past, has a massive influence on what's happening with consumers. So if I increase the money supply, if I say in Joe Blogs land, I'm going to give all of the banks lots of cheap capital, then those banks can go out and lend lots of money to people at very low rates. And they'll go out and spend all of that in the stores. So that'll push up demand and push up inflation. So if I'm allowing the money supply to increase, generally speaking, that will increase demand and inflation. And if I put it into reverse, if I put the brakes on and reduce the amount of money supply going into Joe Blogs land, then that will cause people to spend less, demand will fall, and inflation generally goes down. So we'll have a look at what's going on in Russia because one of the things that Russia has been doing over the past few years since the war in Ukraine started is to increase the money supply hugely. So that's been driving demand and is one of the reasons why inflation is now getting out of control in Russia. And that's why increasing interest rates hasn't really worked because the money supply is still applying. It's on full effect. They've turned on the taps in Russia. They've allowed the banks to have access to lots of capital. So the banks have been lending tons of money to people and companies, and that's driving up demand and driving up inflation. And it's now proving very difficult to stop unless Russia decides to put the brakes on the money supply, but that could have a devastating impact on the whole of the Russian economy. So let's start off by looking at what's going on with inflation. Now, just before we go on any further today, I want to talk to you about Incogni, who I've partnered with for today's video. One of the things that drives me absolutely insane is spam marketing, whether it be text messages or emails or my pet hate, phone calls. People phoning you up to have a chat and to try to sell you something. And the reason why you're getting more and more spam marketing is because of data brokers. Data brokers can take your personal information and sell it on the internet. But the problem that you've got is that how do you stop those data brokers from doing that? Well, you can actually contact each individual one of them and try to get them to take you off their database. But who's got the time to be able to do that? Well, the answer to that is Incogni. Once you sign up with Incogni, they will contact all of the data brokers and have your data removed, and they will also protect you from cybercrime and identity theft. And the great news is that you can get a 60% discount off an annual plan, which is what I use, by going to incogni.com/JoeBlogs or clicking in the link in the description below. This chart shows the movement in the official rate of inflation in Russia over the past 12 months. And as you can see, there is a significant upward trend here. 12 months ago, inflation was running at 7.7%. One thing to note about this chart is that the scale on the right-hand side does not start at 0. It actually starts at 7.6% and goes up to 10.6%. And over the last 12 months, inflation has been rising to the current level of 10.1%. And if we expand the scale of this chart to show the last 3 years, you can see that the current rate of inflation is the highest that Russia's experienced since February 2023. And what this chart shows is that inflation has now been on the increase for 2 years, since April 2023. And if we have a look at how the current rate of inflation in Russia compares to the rest of the G20, you can see that Russia is number 3 on this chart. The only 2 countries with higher rates of inflation are Argentina, where it's now at 66.9%. It's been coming down quite rapidly, but it's still a long way above the rate in Russia, and Turkey, where it's 39%. The next closest country is Brazil, where inflation is sitting at 5%, so around half of what it is in Russia, followed by Japan at 4%, the Netherlands and Mexico at 3.8%, India at 3.6%, South Africa at 3.2%, and then we've got Spain and the United Kingdom at 3%. So the current rate of inflation in Russia is significantly higher than it is in most of the rest of the developed world. The only 2 countries that have higher rates are countries that are in economic distress right now. This chart shows the year-on-year movement in food inflation in Russia, and if you follow the channel, you'll know that we always like to look at what's happening with food prices because it disproportionately impacts on the poorest members of society. And what you can see here is exactly the same trend that we've just looked at for inflation. However, the figures are higher, and the current rate of food inflation in February 25 is 11.7%. And if we expand the scale of this chart to show what's been happening over the past 3 years, you can see that the current rate of food price increases is the highest that's been seen in Russia since October 2022. And the trend here is exactly the same as what we've just discussed for inflation. The increase in food prices has been ongoing for the past 2 years, and this is proving to be a problem for a lot of people in Russia. As I said at the start of today's video, the 2 major levers that a central bank has in terms of controlling its economy are the money supply and interest rates. You can switch these up and down depending on what's happening with demand and inflation to keep everything on track to go in the right direction that you want your economy to go. So to get a better understanding as to how these 2 operate in conjunction with each other, let's have a look at what's been happening in the US economy. This chart shows the money supply for the USA over the past 10 years, and this definition is the M0 definition, which is basically the amount of cash that's in the economy plus the reserves that the banks have. And what this chart shows is that between 2015 and 2020, the money supply was actually reducing in the USA. So the amount of cash circulating in the economy was actually going down. However, as you can see, between 2020 and 2022, there was a sharp increase in the money supply. And this was as a result of the COVID-19 pandemic, which struck globally and reduced the amount of activity in the economy. So the Fed in the USA wanted to boost the economy. It wanted to keep things going. And then as we came out of the COVID-19 pandemic, the Fed wanted to kickstart everything to get everything back up and running again. So there was a large boost to the money supply. And if we have a look at what was happening to interest rates over that same period, you can see that between 2015 and 2020, there was a gradual increase in interest rates from 0.25% to a high of 2.5%. However, as the COVID-19 pandemic kicked in and the Fed wanted to boost the economy, interest rates were then reduced down to 0.25%, and they were then kept at that level for a period of 2 years to enable the economy to get up and running again. And if we have a look at what was happening with inflation over the same period, you can see that back in 2015 there was very little inflation in the economy. However, by 2020, it was sitting at or around the target rate of 2%, which was what the Fed wanted. When the COVID-19 pandemic kicked in, inflation dropped back down to around 0%, and this was a major problem, and one of the reasons why the Fed was looking to boost the economy and get people spending again. However, the problem that you have when you put a lot of money into the economy and reduce interest rates is that people take on cheap debt and start spending, and that drives up demand and drives up inflation. And you can see that by the end of 2021, inflation in the United States was sitting at 7%, compared with the target rate of 2%. So obviously inflation at that point was much higher than the Fed wanted it to be. If we now jump back to the money supply chart, you can see that at the end of 2022, the Fed put the brakes on the money supply and reduced the amount of money going into the US economy in order to try to reduce demand and bring inflation back under control. And at the same time as the money supply was reduced, interest rates were increased rapidly from 0.25% to 5.5%. And the reason why the Fed did that was to make borrowing more expensive, and that would therefore discourage companies and individuals from taking on more debt, discourage them from spending, therefore reduce demand and bring prices back under control. And you can see from this chart that from the middle of 2022 onwards, inflation reduced rapidly down to the current level of around 2.8%, which is broadly in line with where the Fed wants it to be. So hopefully that analysis gives you a better understanding as to the interrelationship between the money supply and interest rates. And all of this is because the central bank in each economy wants to keep inflation at or around its target rate. And the target rate in the USA is 2%. Now in Russia, the target rate is 4%. So let's have a look at what's been happening in Russia since the start of the Ukraine war. This chart shows the M0 money supply in Russia over the past 10 years. And what you can see here is that unlike what we've just looked at for the USA, where we saw ups and downs in the money supply, over the past 10 years, the money supply has been increasing on a regular and rapid basis in Russia. And if we focus in on the right-hand side of this chart, which shows the last 3 years since the war in Ukraine started, you can see that there was a sharp increase in the money supply in the second half of 2022 and the first half of 2023. And it's been maintained at or around that level over the past couple of years. And what this tells us is that the central bank in Russia has been putting a lot of money into the economy to boost the economy to try to get it kick-started again. So it's similar to what the USA did at the start of the COVID-19 pandemic when the economy started to close down. It was wanting to boost spending to encourage people to go out and spend money. That's what the Russian central bank has been doing over the past 3 years. But you can see that there hasn't been a drop-off, unlike what we saw for the Fed. After the COVID-19 pandemic had finished, it decided it needed to put the brakes on and actually reduce the money supply. And as a result of that, we saw the chart going down, and that meant that there was less money available for the banks to lend. And so we therefore saw demand falling and inflation going back down. But what we're seeing here for Russia is that the money supply hasn't been switched off. It's actually still at a level that was boosting the economy to try to offset what was happening in Ukraine. And I think this is one of the key drivers as to why the economy is still showing healthy growth in Russia rather than going into recession, because the central bank is continuing to fuel the economy by pushing lots of cash into it. But the problem that you have with that is that it drives demand and therefore drives inflation. This chart shows the movement in interest rates in Russia over the past 5 years. And what you can see here is that immediately following the start of the war in Ukraine, interest rates were increased from 9.5% to 20%, which was officially declared to be an emergency rate by the Bank of Russia. However, very rapidly, interest rates came back down again and were back at 7.5% by October 2022. So less than 12 months after the war started, interest rates were actually at a lower level than they were before the war started. Now that obviously was to encourage people to spend and goes hand in hand with what we just looked at in terms of increasing the money supply. If we compare this to the situation in the USA when the COVID-19 pandemic was on, the Bank of Russia wanted people to borrow money to drive up demand and keep the economy going. Now interestingly, if we look at the right hand side of this chart, you can see that since July 2023, the Bank of Russia has actually been increasing interest rates, and interest rates have risen from 7.5% to the current level of 21%. So what this chart is indicating is that the Bank of Russia is trying to put the brakes on the economy. The intention is to increase the cost of borrowing to such a level that it discourages companies and individuals from taking on debt and spending, and therefore should reduce demand and bring inflation back under control. However, as we discussed earlier in the video, inflation has been increasing in Russia for the past 2 years. And when you just look at what's going on with interest rates, it doesn't really make sense. However, when you look at what's happened to the money supply over that 2-year period, it starts to fall into place. You can understand why inflation is still rising, because the Bank of Russia is still pumping lots of money into the economy. It's free and easy to borrow money, and therefore people are taking on debt and spending. That's driving up demand, and that's driving up inflation. So we've got two conflicting signals here. We've got the Bank of Russia on one hand increasing interest rates, but on the other hand, it's increasing the money supply. And of course, that's always going to lead to inflation. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the past 5 years. And the reason I wanted to talk about this is because I myself have said on many occasions on this channel that the strength of your currency is directly linked to what's happening in your economy. If your currency is doing well, generally speaking, it means your economy is doing well. And what we can see here is that since the war in Ukraine started, the Russian ruble has been all over the place in terms of its exchange rate. Before the war kicked off, the ruble was trading for around 75 against $1. Immediately following the invasion, the value fell to around 125 to $1, and then bounced back dramatically to around 50. And that whipsaw swing was because firstly the markets were abandoning the ruble, so lots of traders and countries were deciding that they no longer wanted to buy the ruble, and so its value fell. And then the Bank of Russia stepped into the market and started buying the ruble, and that's why it increased dramatically to the strongest level that we've seen for a very long period of time. Now, in the period between the middle of 2022 and the end of 2024, we saw a deterioration in the value of the ruble. And by the end of 2024, $1 was trading for 110 rubles. And that was actually the worst rate in Russia's history, apart from the very brief collapse in the value following the invasion of Ukraine. Now, at that point, things started to change, and you can see that over the past few months, the value of the ruble has appreciated significantly, and today $1 is trading for around 84 rubles. So what is the reason for this increase? Is it because the Russian economy is now doing really well and therefore the ruble is in high demand? Lots of countries and individuals want to buy rubles so that they can trade with Russia, or is it for another reason? Now, as I've discussed many times before on the channel, the market for the ruble is now very small. Lots of countries, the USA, Europe, the rest of the West, do not want to deal with Russia or in rubles. And also Russia's biggest trading partners, China and India, are also refusing to deal in rubles. They will only deal in Chinese yuan and United Arab Emirates dirhams. So Russia isn't seeing a large demand for the ruble. And what we have seen over the past 3 years is that the market is now very, very small. And the benefit of having a very small market for your currency is that it makes it much easier to manipulate the price. You can control exactly where you want that price to be. And what we've seen over the past few months is the Bank of Russia has been stepping into the market to support the value of the ruble, and that's what's driving up the strength of the ruble, not because of what's happening in the Russian economy. So we've got a disconnect here between the currency and the economy as a result of the war in Ukraine and the serious sanctions that are in place against Russia. The market for the ruble is now very small, and that means that the Bank of Russia is able to manipulate the price, and that's why it's currently sitting where it is. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's going on in the Russian economy right now is really quite interesting. the latest data for inflation shows us that it's now into double figures, and this is the first time that Russia has gone above 10% since February 2023, so more than 2 years. And that's obviously a problem because even if you know nothing about economics, you know that high levels of inflation are something that everybody's always talking about. Nobody wants prices getting out of control. And when you've got double-digit increases in prices, that is a serious issue because for most people, you haven't got a double-digit increase in your wages. And so therefore, you're going to have less money to spend each month. But what we're seeing in Russia right now is really quite fascinating in terms of what the Bank of Russia has been doing, because it's been raising interest rates. We've talked about that a lot on the channel. They've gone up from 7.5% to the current level of 21%, which is off the scale, really. That is the highest rate that it's ever been in Russia. This is the record level. And 21% hasn't been seen in most economies ever. It's really just unmanageable. You've got to the point where everything's getting out of control. So the Bank of Russia isn't happy that it's at that rate. And based on that simple analysis, it seems puzzling that inflation has continued to rise. Why is it still going up if interest rates are so high? And the reason, as we've discussed in today's video, is because of the supply of money, what's been referred to globally as quantitative easing, where the central bank makes it much easier for all of the banks to get access to capital, and that capital is then distributed to companies and individuals in the form of loans. So basically, you flood the market with money, make it easy for people to get cash. They then go out and spend that cash. That drives up demand, and ultimately that will drive up prices. And you do that at times when your economy is slumping, when there's a problem that you need to fix. So we talked about the USA needing to do that at the time of the COVID-19 pandemic because the whole of the USA ground to a halt. So you needed to get everything kick-started again. And Russia has been doing that following the invasion of Ukraine. We saw in the middle of 2022, when the severe sanctions were starting to hurt the Russian economy, that the Russian central bank took the decision to ramp up the supply of money. M0 went up significantly at the fastest rate that it's ever risen in Russia's history. However, the Bank of Russia has never switched that supply off. It is still going at the same level as it was a year or 18 months ago. And so increasing interest rates isn't going to solve the problem. That's not going to bring down inflation on its own because you need to do both. You need to push interest rates up and you need to stop the supply of money, reduce it, make it more difficult for people to borrow money, and therefore they'll have less cash available, so they'll spend less, demand will go down, and inflation will get back under control. So the overall summary of today's video is that the problems in the Russian economy are continuing. We're seeing inflation continuing to rise. It's now into double digits, which is more than double the 4% target set by the Bank of Russia. It's actually 2.5 times that target. It's increasing month on month and has been for the last 2 years. That tells us that there are serious problems in the Russian economy right now. The Bank of Russia is really struggling to get it back under control because whilst it's been allowed to increase interest rates, it hasn't been allowed to switch off the supply of money. And that increase in the supply of money is fueling demand, which is pushing up prices, which is pushing up inflation. And we have got a really vicious circle here that until the Bank of Russia is allowed to switch off the money supply, it's likely we'll continue to see inflation rising and problems continuing in the Russian economy. The problem that Russia has, obviously, is that if it does switch off the supply of money, then demand will start falling and the Russian economy could slump into a recession. And obviously, the authorities don't want that. So that's one of the main drivers why the supply of money is staying high. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and thank you to everybody that's supporting the channel. If you bought me a coffee, thank you for that. If you've sent me a YouTube super thanks, really appreciate that. And if you've signed up as a patron or a member, I genuinely appreciate the long-term support that you're providing to me. Really helps to keep me going, keeps me motivated. So thank you for that. And here's something to put a smile on everybody's face.